Okay, sorry about that. So we're going to get started here. We're going to break down the watch list for today, go over what I'm looking at. May take a couple trades depending on whether or not I see any opportunities. At the moment, the leading gapper is only 37%, so it's not a really big gapper. I'm not sure if we're going to have any super clean opportunities this morning, but it is still a little early, so that it's fine. Reminder, today at 1 p.m. Eastern, I'm going to host a class right here on YouTube. So there's the link for that. So make sure you guys, you can bookmark that link if you'd like, and join us at 1 p.m. I will be teaching timing your entries and exits while day trading. So that'll be the topic for 1 p.m. That class will be probably an hour long, but I might let it go longer if there's a lot of questions. And so anyways. It'll be recorded on YouTube, so it'll be saved on the YouTube channel. Okay, so this morning our leading gapper is PLX. It's a 44 million share float. It's a little on the cheaper side. I'm really not that interested in it. The second leading gapper is Acer, ACER. Already we've seen some fake bids. A big 100,000 share bid and another 50,000 share bid popped up. It squeezed up here, and then those bids were pulled and it dropped right back down below VWAP. But it didn't really sell off too hard, but it did pull back to the 20 moving average on the 1 minute. And because we're seeing those spoof orders, that's what they appear to be. It does make me a little concerned about trading it, because it shows us something's going on, and I don't know what it is. I don't know if someone's short and is, trying to. It's not on short sale restriction. It's easy to borrow, so I don't know if someone's trying to short a big position or if someone is underwater from, any of this previous price action and is trying to get more people to buy it so it goes back up. But I don't like seeing that, so that makes me a little bit uninterested in it, but you never know, maybe it'll open up. So that's Acer. SPI, this one, 17 million share float, pre-market high at 4 a.m. was at 417. It was from after hours Friday, continuing Monday morning. Not that interested. Twitter, it's got the Elon Musk news, takes a 9% stake. I don't like this stock, so I don't really have any interest in it. Next one down, RCAT, it's only 20% gainer. So, you clearly see that we don't have anything super obvious right now. We don't have anything really looking phenomenal. The S&P 500 this morning is trending just a little higher, but nothing super exciting. So yeah, right now it's just kind of sitting patiently and waiting for something to become obvious and present a good opportunity. So we could have breaking news this morning. It's always a possibility. That would be nice if we did. Something that breaks between now and 10 a.m. and ends up giving us a great opportunity. I just don't know. It's Monday morning. A higher likelihood of that happening today than on Friday, but towards the end of the week, not as likely. But yeah, right now, just looks a little bit like sitting tight, being patient, and waiting for something to become obvious. So I'm almost inclined to just close my trading platform unless something pops up, because I don't really want to get tempted on taking a small little base hit trade, because the problem is, if it doesn't have parabolic potential, if it doesn't have a lot of potential, the most it's going to go is Even Acer, even 10% would not be likely. You know, if it broke 4, would it go to 440? Based on the current price action, it doesn't look like it would. So if the biggest move you're going to get is 10%, you're only going to get a small piece of that. So I'd rather wait for something that looks like it has potential to give us a, you know, I don't know, 30, 40, 50%, 100% move. That's going to be if something has news and starts moving fast. Now, initially when Acer popped up, it did squeeze nicely from $3 up to 4, and then it kind of ran into resistance. It went from 3 up to 380, pulled back, sort of a flat top at 380, dropped down to 350, and then curled back up for an attempt at 4, hit 4, couldn't break it, and has pulled back since then. SOPA, yeah, we've, you know, traded it before, but not sure right now. Acer is also easy to borrow, for what it's worth. But if it's not up a lot, it doesn't present really a great short, in my opinion, either. It just doesn't have enough range right now. STRY, the float's a bit higher on this one. It's a recent SPAC that has merged. So, you know, you could look at it as sort of a recent IPO, $10 being the high, but I just don't know that it's going to do much. I don't know. Well, I'll wait for more volume. So yeah, it's true. With a free commission broker, you might feel like, oh, I could take some stabs at stuff. You know, there's no commission, so what the heck. I'm still with Lightspeed. I have a TD Ameritrade account, but I'm not using it for trading right now. Could we see a short squeeze on Acer since it's easy to borrow? I mean, sure, I suppose. It is easy to borrow. So maybe, but the price action doesn't really feel like that. Some FDA breakthrough therapy designation news. So I would need to see it squeezing up and moving quick. That's what I'm looking for, is rate of change, something moving fast. And it can be something with high volume, it can be something with light volume. I just want to see something moving quickly. That's what I look for. But I don't see anything right now that meets that criteria. It's about rate of change, so something moving up quickly as a momentum trader. Yeah, I mean, I get caught in false breakouts sometimes too. I mean, probably every time I have a losing trade, in a way, is a false breakout since I'm primarily breakout trading. But I suppose dip trades, sometimes I'll take a dip trade and it goes lower, and that happens too. LGVN, yeah, it was kind of grinding on Friday. It was a little tricky. You never know, but I don't think it's obvious enough. So, I'd want to see something lighting up my scanners, moving quickly, preferably a leading gapper. But we can take a look at the continuation scanner just to kind of take a peek at some stocks that have made big moves in the last week or so. So FRGE is at 28 bucks. So first, just looking at the daily chart, right? So it's pulled back quite a bit. REVB, yeah. NRSN, still pulling back. LLL, big move. Squeezed on Friday from 355 up to 420. Moves like that squeezes like right into a halt and opens and goes higher. But then it came all the way back down. IMTE, still green. Slightly lighter volume Friday than on Thursday. So over the weekend, I uploaded March month in review. I'll post that here. So finished up 90,000 for the month of March. So there's March month in review. And last week, let's see. So that's right there. So make sure you guys check that one out, March month in review. And then last week I had a video that I uploaded, which I think you guys may enjoy as well. Let's see. Called The Simplest Day Trading Strategy for Beginners. And so if you watched that video, then you would know exactly why I haven't taken a trade yet today. So you guys can check that one out as well if you'd like. So the daily goal today would be about $5,000. Looking at my metrics for the month of March, I was finding that I was averaging around 4,000 a day. So $4,000 or $5,000 daily goal right now. It certainly is less than I was averaging last year at this time. But you got to be willing to adapt to the market, and I'm happy to do that. So adjusting to the current market we're in, which means being a little bit more conservative, trading maybe just a little less actively if I don't see anything that looks good. It doesn't mean when something looks good, I still want to be aggressive. I'm happy to trade that with larger share size. But let me do this. But I need to see something looking obvious. Well, it's about opportunities that fit within your strategy. So a different trader with a different strategy might find opportunities on a day where I don't see anything, and I might find opportunities on a day where that trader wouldn't see anything. So, to a certain extent, it's within the strategy that I trade, which is momentum. I don't see anything that looks really obvious. Now, you could say, well, hold up. Twitter's got some momentum. Yes, it certainly did at 6 a.m. And, this is what we love to trade, those types of candles, those green candles. But then it's pulled back quite a bit. So now it's coming back up, but it has to get back over the volume weighted average price. So this is probably not one that's going to be as good for quick breakout trades. Those who like to take those quick breakouts, a quick long of the break of a whole dollar, quick profit, add back at 48.50, quick profit, add back at 49. That's not the price action that you're probably going to get on this stock. I mean, again, I could be wrong. I certainly could be wrong, but that's my guess. So it's coming up a little bit right now. And that's based on the fact that the float's 600 million shares. It's easy to borrow. It's an institutional stock, institutionally traded, and that creates choppiness. You've got some of the best algos in the world trying to trade and make money on these stocks. You're also, you're going to have institutional traders who, at various points, will just hit the market button and cash out a 50,000 share block, 100,000 share block. Stock's up 23% this morning. So, you're in it, and then all of a sudden, some guy sitting at his Wall Street desk punches the sell button for 200,000 shares. It's going to drop, on that order. The market makers are going to move out of the way. It's going to drop, and now you're holding through a pullback. And you're going to see that type of price action more frequently. Unfortunately, it's just the way it is. I honestly think that I shouldn't have traded on Friday. I did finish Friday up $2,800 or so. But the two trades I took, the two stocks I traded, they weren't that great. And both of them, either one of them individually could have cost me a $3,000 loss and only gave me about $1,500 of profit each. So the risk-reward ratio really wasn't that great. And, I'm lucky I didn't finish the day down $4 or $5 grand. So today I'm kind of like, you know what? You kind of got lucky on Friday. You could have easily finished the day down $4 or $5 grand. There wasn't anything that looked great, and you probably shouldn't have traded. You should have been more patient. So this morning, this is an opportunity to exercise that discipline. If I really don't see anything that looks that great, then, I think that the right decision is to be patient. It's not what I like to do. I'd like to trade. I like to be active. I'd like to make money today. I came to sit down Monday morning to take some trades to make some money. And so any day that's I'm not seeing those opportunities is naturally disappointing, but the alternative on days like today when there isn't an obvious stock or a leading gapper is trading setups that don't fit as well within my strategy. And then when I do that, my accuracy is lower, my profit loss ratio is worse, and I either don't make as much money or I potentially set myself up to take a completely unnecessary loss. And that's what I don't want to do. So, for what it's worth, there's over $11 million in gross profit trading momentum. I know where I find the most success, and I know where I get myself into trouble and have unnecessary losses. I've had a lot of them. There's a $240,000 loss right there. The biggest loss I've ever had is bigger than the biggest winner I've ever had in my entire career. So I've gotten burned enough times to know that, when I'm going outside my comfort zone, I better be real careful. This is a stock at $30 a share. It's a higher price stock. And those ones, while sometimes they can, produce some profit, they tend to be riskier. So, as always, my results are not typical. I've been trading for a long time, so you shouldn't expect that you'll achieve a similar result to me. I would encourage you as a beginner trader to trade cautiously and put money in a simulator before you trade with real money. My biggest loss from one trade was $240,000. So the hope right now is that there's a company out there that decides to put out a phenomenal PR sometime between now and 10 a.m. That's what I'm hoping for. Will we get it? I don't know, but that's what I'm hoping for. So what made me not to sell the $240,000 loss, I bought 40,000 shares, and I got caught in a halt down. It gapped lower, and I lost 4 points, $4 a share. They're just, or actually no, what was it? Must have been $5 a share. Anyways, it was a good size loss. And so, 4 times 4 would be 1,660. Yeah, I managed to lose 240. So maybe I averaged down on it too. I don't even really remember, but I took a good size loss on it, and it was because I got caught in a halt down. I don't remember if it halted down. It might have even halted down twice. I mean, it was brutal. So, I took way too much share size on that. Thing is, if it had broken that $30 level, I think I was looking for a squeeze into a halt up. So, maybe it would have gone up 2 points, 32 to 33-ish into a halt up, 32.50. I would have taken profit off the table. Maybe I would have been up $50,000 on it. I might have added back on resumption, but I wouldn't have made 500 grand. No way. It just wouldn't have happened. So the risk reward ratio was not good on that trade. But anyways, it's all good. That was over a year ago, and yeah, at this point, it's the water under the bridge. So we've got about 3.5 minutes to the opening bell, and at this point, I am still not seeing anything that I'm in love with. So I'm gonna sit here patiently and wait to see if something pops up and hits my high day Momo scanner and has news. So my high day Momo scanner is right here. So this is running all day long, from early, until after hours, just running all day long. So waiting for something to hit that scanner, then I can do my due diligence, take a look at it, decide whether or not I like it. And if I like it, it's moving quick, I'll buy it. And if not, then I'll just let that idea go by. I'll say, nah, that one couldn't trade it, like I didn't trade Acer, and wait for the next one. So again, for those on YouTube, I'll be back live streaming at 1 p.m. So we'll trade here for Warrior Pro members, Warrior Trading, and then stick around. I'll do my, if I take trades today, I'll do a recap. If I don't take any trades, I don't know if I'll do a recap, but anyways, I'll decide that in a little bit. And then I'll take a lunch break, and we'll come back here at 1 o'clock for a free class right here on YouTube on timing entries and exits while trading. I've got a bunch of live trading examples that I'll show you, and I'll give you guys links to download some live trading archives. So if you guys decide you want to download those, you can download them. I'm doing some special stuff on YouTube this month because this is our anniversary month. It's been now, what was it? 2013 when I created the channel, but I think it was 2015 that I uploaded our most popular video, which now has almost 10 million views. And it was 2014 when I opened Warrior Trading as a membership community. It had been a blog before that, but so this is kind of an exciting time of year, and I want to do something special and give back a little bit to the YouTube community. So thanks for Warrior traders being supportive of us doing that. And during the broadcast, I will be donating for every thumbs up we get. I'm going to donate $1 for humanitarian causes in Ukraine. And for every share, I'm going to donate $2. So if we get 100,000 likes and shares, I will donate, combined $100,000 for the likes and whatever we get for the shares. Then that'll be over the life of the video, not just during the live event. So I will step up to the plate, and you can donate money through me just by hitting the thumbs up. So, realistically, some of the videos that perform well, maybe they'll have 10% thumbs up. So if they get 100,000 views, they'll have 10,000 thumbs up. So that's probably what I'll end up donating. But I'm going to do some things like that through the month of April. So this won't be the only one. All right, so here's the opening bell. I'm going to end the broadcast on YouTube, but come back at 1 p.m. for the free class. And I'll just give you the link one more time to that free class just so you have it handy. But if you didn't already check out a couple of the other videos, those on YouTube, while you're hanging out, waiting for the class later, you could check out March month in review if you'd like. There I am again. And here's the link for 1 p.m. Okay. All right. Trade smart. Manage risk. YouTube folks, we'll see you at 1 p.m.